Hey everyone, welcome back to Corporate Decoder, the place where we slice and dice those dry corporate filings. Today we are going into the world of ultra short duration income funds. Don't worry, I'll break that down for you, but spoiler alert, these filings aren't exactly edge of your seat thrillers, but we will try to find some thrills today. We are taking a peek at the PUTNAM Ultra Short Duration Income Funds report for the 6 months leading up to the end of January of this year. This fund is basically about investing in bonds that mature quickly, making it less risky than holding on to bonds for a long period of time. We will cover what the fund owns, what it costs, and more. First, let's talk about costs. For Class A shares, if you had $10,000 invested, it cost you about $21 over the last 6 months. That works out to be an annualized expense ratio. Think of it like a yearly fee of 0 paying for 20 in fees each year. Other classes are different. Class C will cost you $42, Class N $29, and Class R6 is only $15, Class N. 29 I's and Class R6 is only $15, Class N 2019s. And Class R6 is only $15, Class N $29, and Class R6 is only $15, Class N 2019s, and Class R6 is only $15. Class N $29 and Class R6 is only $15, Class N $29 and Class R6 is only $15. Class N 29 in Class R6 is only $15. Class N $29, and Class R6 is only $15, Class N $29, and Class R6 is only... Now for some key stats, the fund's total net assets are a whopping $9,765,982,403. They have about 493 different investments in their portfolio. That can also be called holdings, and their portfolio turnover rate, or how often they are buying and selling investments, is at 35%. That means that in 1 year, around a third of the fund's holdings will change. What kind of stuff did the fund invest in? Most of their money, about 75.2%, went into corporate bonds and notes. Another 10.9% went into commercial paper, which is like short-term IOUs from companies. They also had smaller chunks in asset-backed securities, mortgage-backed securities, certificates of deposit, and US Treasury bonds. The largest sector that the fund invests into is banking, with almost 40% of all the money going to various bank bonds and notes. Now let's dive into the official financials and see if we can spot any key numbers. Let's look at the fund's assets and liabilities. The fund's investments in securities are valued at a little over $9.7 billion. Overall, they were profitable here. The identified cost was $9,730, $53,800, $22,400, $22,530, and $422,200, $225,000, $70,051 in receivables. This is probably interest payments that have not yet been received. Looking at the liabilities, we see that it has $22,442,029 that is payable for shares of the fund repurchased. That means that people have requested to sell out of the fund, but the transaction is not yet finalized. Moving on to the statement of operations, we can see net investment income was $242,232, $2082. This is the amount the fund made from their investments after expenses were paid. Net gain on investments was $6,788,009.08. Looking further, we see that they actually have unrealized appreciation of $1,168,382 Unrealized gains mean that this money is only on paper. In other words, it's what they could make if they sold the investment today. To summarize it all into a nice number, this all brings us to $249,119,100 and $9,919, which is the net increase in net assets resulting from operations. Which unfortunately, the fund also had distributions to shareholders of about the same amount, so really they did not see much profits. Now let's look at the statement of changes in net assets. In this section, we look at shares being sold, reinvested, and repurchased across the board. Class A, Class C, Class C, Class C, Class N, Class R, Class R6, Class Y. Sales are up significantly, however, so are repurchases. Finally, let's look at financial highlights. The total return for the fund was between 2.334% to 2.70% depending on the class. The more exclusive the class, the more return. The fund operates as a single segment, nothing interesting here. The fund trades in financial instruments and enters into financial transactions where risk of potential loss exists due to changes in the market risk, or failure of the contracting party to the transaction to perform credit risk. We also see that the net amount the fund can offset is $25,000 North. Finally, let's take a look at what the leadership thinks. In September, they appointed a new sub-advisory agreement with Franklin Templeton Investment Management Limited. Because someone who was previously holding that job merged, they just gave his job to the new company. Now let's put this all together and talk about this investment. This ultra-short duration fund seems to be focusing on a low-risk profile. By investing in short-term bonds and notes, they are trying to get some income, but they are not necessarily trying to shoot for the moon here. As we saw, banking was their primary market. One of their strengths is, well, it is pretty stable. While there is not a huge growth to be made, there is likely going to be very minimal losses. One of the weaknesses would be that this fund is probably not going to give you huge returns. It is trying to be safe, so you are sacrificing big gains for that safety. In addition, those fees, while not super high, take a cut from any potential earnings. The risk with a fund like this is usually going to be interest rates. If interest rates climb up, the value of the bonds is going to go down. So you are going to want to keep an eye on that. So is this fund good or bad? It depends what you are trying to do. If you have some cash you want to park somewhere safe and make a little income, this may be a good place for you. Just make sure you understand all the fees involved. However, if you are looking for something that will grow a lot, you should probably look elsewhere. Thanks for watching. If you want to understand the financial world, please subscribe, like and comment.